Okay, guys, welcome again to the Hybrid Trading X YouTube channel. Here we try and stick to only the facts and trading analysis in Bitcoin. As you can see on the chart here, we've got the head and shoulders pattern possibly forming. Now, why I say possibly forming is because certain things may happen that may invalidate this head and shoulders. So I'll get right into the content, into the video, and explain why, and obviously for targets, and what type of pattern this is, whether it's a bearish pattern or a bullish pattern. But this pattern is generally and most commonly traded in all forex crypto markets. Okay, the chances of it actually playing out once identified properly and the three criteria are matched and filled, then the targets are generally achieved. Okay, I'll show you how to draw the targets. I'll show you how to lay through it with the chart on the head and shoulders, like you can see with all the labels on the top over here. I'm going to go through everything with you in this video. All right, excuse me, guys. Got a bit of a frog in my throat. Okay, so now we're using just the Bitcoin USDT tether on the Binance chart. The reason why I use this because, excuse me. The reason why I use the Binance chart is because I use Binance to do my spot trading and leverage trading as well. So it's the closest price to that, okay? Because a lot of the charts you use, either use Bitfinex or you use Dudex or Femex or Bybit, whatever case may be. If you're not trading on Binance, but you're using a Bybit chart, your prices are going to be different. Okay, because each exchange or platform has a different price set. A couple of percentages that are not exactly the same, but relatively yes. Okay, even though this one is not the same, I'd rather be using the Binance futures, perpetual futures chart on Tradingview, because it gives a more accurate one. But because the data isn't as much as in the past, so the data doesn't go as far back, because they only recently, they only loaded it a while ago. Okay, so it hasn't got that much data on it as opposed to a Bitfinex chart. Okay, I hope you're understanding that. Okay, let's get right into the head and shoulders. Okay, I've been watching this now for since roundabout over here, in this section over here, which is around about the 13th of June. Okay. Now, there's two patterns that could evolve out of here. Right now, at this moment, we could be having an extended M pattern, okay, which could fall down to this bearish target here. And this bearish target here is 31,700. Okay, now at the moment what the price action is doing, it's following and it's bouncing up and down, consolidating in this area, up and down, up and down. And by the way, this is a 2-hour chart, so it's bouncing up and down in this area. You can see I've got a horizontal line here of support and resistance, which follows through all the way through. So there, we've got touch points, there's support. Okay. There we've got resistance. There we've got some more resistance in that area. Then we push through again. Then we've got more resistance in that area over there. Okay, so that's why I've drawn this box here for myself. So I can see exactly where the price is going to go in terms of trading analysis and also in terms of opening up a trade. Okay, now, both instances, the M pattern, the extended M pattern. Now, extended M pattern starts with a lower left part of the M and ends off with a higher right part of the M. The other way it would start an M pattern over here. Let me just get my brush there. M pattern there, and then it will flow down to there. Okay. Right. Everybody understanding that one now? Okay. You might notice, that I have got the top mark over here. That is the top of the price where Bitcoin went in the local high. Okay. If we scroll back there, we see a whole lot of touch points there on this area of resistance. Okay. After we came down and we climbed up again, which was a nice pump again. Okay. Which we like to see in Bitcoin all the time. But what we need to understand is what the targets are. Okay. So I've got the part of the head and shoulders here. If we do get a bounce to the upside, we are probably only going to reach this area here, which is the level of resistance. You see, we got a touch point over there. We got a touch point over there, and we came back down after that large wick up there. Okay, which is possibly a fake out. Because here you got a descending triangle. I will do a video regarding a descending triangle on what the pattern signifies in the market. Okay, but there we got a fake out breakout, and then we came back down and we broke down out of the descending triangle. Okay, so then now we're obviously going bearish. Okay, so now if you want to do a chart like this, what you have to do is that you go over to your left hand panel here. You click on that squiggly there. This is the XABCD pattern. Click on the arrow and you go to the head and shoulders pattern. Right. And you click on that. You start off wherever you want to start and you actually click it up there. So I'll actually click over now that one and you actually see the right shoulders there. And you put it in the area. Let's just make it bigger for argument's sake. Whoopsie. Click it there. And we click it back down to the level over there. Because now there, in this area here, is a upward sloping trend line, which is currently being broken here now at the moment. So I may have to adjust my head and shoulders pattern slightly. Okay, as we go along, you're always adjusting your patterns. Okay, because it's far too early in this pattern to determine whether it is actually a head and shoulders. It's probably more leaning towards an extended M pattern, which are both bearish price targets. Okay, so now we're going to place it there. We click on that area there. We click on that area over there. Say I'm going to go a little bit higher. And you see now the second time, as I'm moving down towards the right shoulder, you see the level comes in there, which is your trend line. Okay, automatic trend line, which is formulated for you on Tradingview. Okay, and you see now where it's moving on this side here. See how it colors up. See, the whole section gets colored. There's no color there, and all of a sudden it gets colored. Okay, so you want to line these lines up. See, then now it's colored up. Then you click again on the section that you want to start your right shoulder on. Then you go up. Then you click on the top and you come back down to wherever this line is going. Okay. You can always change the line, the right shoulder line, to here or there or wherever the case may be. It all depends on where you are doing your analysis and how it suits you. Okay, so now there is your head and shoulders. How I've done this line over here is that I've just extended this line all the way down to match my bearish target of the head and shoulders. Okay, so I'm just going to leave it there for now. Oops. Okay, now if you want to change anything at the moment, say for instance this price goes down over here, you can actually move it across like there. Okay, but now watch out, because as soon as you move it there, this changes over there. So watch down at the left hand side, you see that changes. Okay, so you'll have to keep on updating your chart as it goes along. So now I'm going to put my line across there, There's the head and there's the right shoulder, and now this has now moved across there. This is the over top of the overlay of the head and shoulders over here. Okay, so I'm going to go quickly delete this one now, because now I've showed you exactly how you can do a head and shoulders. Okay, if you want to change colors, you just click on the line. Okay, like that. There you go. You can change the colors. You can make it red. You can make the pattern inside. You can make it green or blue or orange, whatever case may be. And you can change the transparency. You can make it full. You can make it dim. So you can see the patterns and the chart grids and everything. Okay, so I'm going to go back now. And I'm just going to go back. Ooh. Okay, it's not going to work there. Okay, so I'm going to go blue. It was blue, and it was blue there, and there we go. Bob's your uncle. Okay, so now this is your head and shoulders, guys. All right, so now the head and shoulders, how are you now going to determine the actual bearish target? Okay, I've got the bearish target here. If it does play out, if the Bitcoin price goes up, I'm going to just adjust my target, my head and shoulders over here, and there. I'm going to take this away. Okay, so now we're changing the axis once again, so you just got to watch out for that as well. I mean, yes, okay, it's still in the price range, because there at the bottom we've got a wick down, which is bounced off that support line, trend line, and we have come down into there. So that's sort of okay. Okay, I'm happy with that. Okay, I'm just going to, this is just my trend line that I keep on the sideline there, so I can always track it, because then I can just extend it up if I really want to. Okay, for later technical analysis on the current trend line that Bitcoin is now following. Okay, so we've got a trend line. Once again, I'll do a video for you guys. And by the way, guys, if you like this content, please smash up the like button. Click on the subscribe button as well, which is going to appear over here. And then obviously click on the little bell notification and click all. Guys, if you want to comment. If I do see them and I receive them and they're pretty sufficient and good quality comments, then obviously I will reply to them. Okay, to the best of my ability. Okay, guys, so now we want to discuss and find out where the Bitcoin price is going to go after we have reached the head and shoulders. We have completely formed the head and shoulders. So the right shoulder needs to form. I want to now know, where could the price go? All right. So I'm actually going to just remove this here. Let's just remove this there. Okay, so we click there. We click remove. I'm going to remove this line over here. And I'm going to move this back up to here. Okay. All right. So now I want to determine the target. So you take it up to the highest point of the price, which is that wick. You can take it right up top there. Okay, click down and you bring it down to the base of the head and shoulders. Okay, so the base of the head and shoulders. Bring it directly vertically down. Don't bring it down at angles, because then you're going to get the incorrect information or incorrect target. Click on the area and then click on the actual line and bring it down in line with that end piece of the bottom of the right shoulder. Okay, so there is your target. Okay, now let me show you something. I'm going to take a horizontal line and I'm going to draw it exactly there. I'm going to change so it's an actual solid line. And you can see the confluence here at the moment. Okay. There is already touch points of rejections. There we got a bounce. We bounced back up. The wick, the red candle got pushed back up there. So there is an area of support that we could go down to. And we could get a bounce from here. So this area could be your target area. Okay. Now if you go across We follow that line across, and funny enough, we got another touch point there. So there's another touch point of support. We've broken support here, but we've come past there. But the next one, we got a wick all the way down. The bulls came up and bought from this area down here. Area of value, guys. So this is now support. So we've got 1, 2, 3, and we've got a 4 here. If you look at this candle over here, so we've got 4 areas of value, 4 touch points which could act as support and could signify the end of the downward movement of the head and shoulders. Okay, all right. Now we're going to do the extended M pattern target. Okay, so now we're going to say, all right, what do we need to do? We're going to do exactly the same as what we did earlier on. We're going to go to your trend line. We're going to pull it right from the top of the wick down again. Okay, and you'll find out that is exactly the same as the head and shoulders. I'm going to put that to the side. So what we can actually do, we could go right click and we go clone, because we know it's the same size or the same length, and we're going to place our target over here. I'm only going to place it over here, okay, because we're not breaking this level area now, not breaking this trend line yet. We haven't broken it yet, okay. But now we're going to see, because this could still float up like this and then all of a sudden break down. So you'll need to adjust the downward target vertical line up and down as the price goes down until it breaks. Okay. Now you can see, if you place it in this area, you can see around about the 19th of June at 2 o'clock, it's going to break down, so forth and so forth, so forth. But it's not going to break down until the breakdown. So this is not an indication of where and when it's going to break down. It's just giving you the target. Okay, so now I'm going to give you the target. Let's say it's going to break down round about over here. Okay? Hypothetically, let's see. Okay, so now the target that you see is over here. Okay, now funny enough, once again, I'm going to take this vertical or horizontal line, I'm going to clone it, and I'm going to bring it down to that area. Okay, so this is my target. So the target there is 32,491 as opposed to 33,000. Okay, so you see the difference over here. Then I'm going to follow along, go backwards. Always look back, guys. There we've got some support and resistance there. So we've got support, 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 support. We're going to go right across. Once again, we've got some support. Now, if you want to go right across, let's go to the daily. And where's my chart now? It's not showing up now. Oh, okay. Wait. Then we go back into the 2 hour. And then we just simply go across. Okay. So now, we're just waiting for the chart to load quickly. There's the head and shoulders target. You can see once again all the support lines. Okay, support and resistance. Okay, there's resistance, there's resistance. There's support, there's support. Okay, there we got some more support, there we got some more support, there we got some more support. All right, the same as again as the extended M pattern, which is below. Support, support. Okay, support, support. Okay, and so forth. So you're getting the picture, guys. There we got support again. All right, the candle body closes or even wicks sometimes. Okay, I would like to work solely on candle bodies. Okay, not wicks. Wicks are rather used in trend lines. So we're following a trend line. We follow a trend line from here. And we line up the wicks like that. That's an upward sloping trend line. And then obviously you get a downward sloping trend line, which is like so. Okay. Once we break the downward sloping trend line, then we usually get a pump to the upside. Okay. But I'm not going to talk about the trend lines now. I'm talking about the head and shoulders, possible head and shoulders, and the extended M pattern that could play out. Okay, later on in the next couple of videos, I'll do how to trade breakouts on downward sloping trend lines and upward sloping trend lines and so forth, where your areas of value, how to trade it successfully with your stop losses and your entry points. Okay, so now for this to play out, say for instance the price does break out of the head and shoulders. Okay, so price would then come down, would bounce around, and then eventually break down through here. Normally, what will happen, it will come back up and retest, and then go back down. Okay, and then retest, and then go back down, and then retest, and so forth. Okay, so what you want to actually do is open up a trade, not in this section over here. Okay, because what happens if you're going to open up a trade? You're going to open up a trade, it's going to go down, so, oh, yeah, I'm in the money, I'm on the money, and all of a sudden it's going to revert on you and then come back up. And then you're going to be in the red in this section over here. Okay? So what you actually want to do is open up the trade over there. Okay? On confirmation of the previous low. Okay? So you know it's going to be rejected on this area, because if it doesn't get rejected and continues through, you'll be stopped out. You don't want to be stopped out in a loss. Come, guys. I mean, this is financial and risk management. I mean, you don't want to be stopped out in a short-term pump. It even could be a fake out. Okay? And your stop loss is probably around about over here in this section over here, because the other low, which is your support or resistance, you don't want that. So you open up your trade over there. Okay, because what will happen is that the price will come down, will break down, fast down through there, and will come back up and will go back down. Will bounce off resistance, come back up, and go back down. Okay, so that's how you open up a trade. Same thing happens if it breaks out over this extended M pattern. The same thing, guys. Price breaks down, comes back down, may even bounce off there, and then come back up, and then come back down. That's where you open up your trade. Because what will happen is the price will come down, bounce, come up, hit the top resistance line. If there's not enough bulls buying, then the price will come back down, and we'll go there, and we'll go there, all the way down to the bearish target. Okay. Now, another situation as well, guys. Please, please, please. Part of trading is not to be greedy. You want to follow, whether you are trading spot on the upside, whether especially on the leverage when you're taking a short. Guys, you need to be careful, and you always need to take profits. The reason why you need to take profits is because you could find another area of value here. Price could plummet down to here and then bounce. Okay? And then follow through and then bounce again and go back up. All right. So you need to take sections of profit regularly in your trade. So depending on the position size, say for instance you've got $1,000 US or USDT, you take 25%. Take 25% over there. Price comes down, you've already taken profit. Price goes back up there. Bring down your stop loss. So your stop loss should be up around about in this area over here. So what you must do is, as soon as price dips down to this section, bring down your stop loss. Okay? Bring down your stop loss, to this section over there. So it's on your break even. So even if you have taken profits down here, 25% profits, you still keep your 25% profits, but when the price goes back up and hits your stop loss, you break even. You don't lose any more as opposed to where your stop loss was before. okay, in this section over here. Okay, you guys understand where I'm getting at. So you need to do proper risk management, guys. And this is how you do it. Sorry, I just got to get rid of this. It's not wanting to move, but anyway. Okay, so that's how you trade an M pattern, a extended M pattern, and in general, the same thing goes for any other pattern. If it breaks to the upside, everything is reversed and you do it towards the upside. Okay, so your stop loss below price, you wait for the pump up, okay, wait for the pullback, okay, then upon the retest, you know it's going up, that's where you enter your trade. Because you know that as it happens, we are coming down for the retest probably, okay, and then we are going up again. We are coming down and we are going up for however long it goes, depending how long this short-term cycle is for the Bitcoin price. Okay, so that's what you should be doing in terms of your trading and opening up and closing your trades. Okay. All right, guys. Once again, if you're new to the channel or if you just joined and you're watching now, just please smash up the like button, hit subscribe, hit the notification bell, so you get all my notifications when new videos are coming out. This is for not only advanced traders, this is for beginner traders as well. I'm going to leave my Twitter account there on in the comments line at the bottom. I'm going to leave a Tradingview a channel so you can watch like a chart like this in real time. You just click on play, and I'm actually going to show you now. So here you go. So here's my Tradingview account. I've just only recently started doing this now. It's actually working pretty well. So now you can actually see my head and shoulders there. You can actually click on the button and then it will update there. Okay, this is obviously an older chart from a couple of days ago where I've been tracking it, and now obviously I need to just quickly update this, and then Bob's your uncle there. Okay, there's a brief explanation of what goes on there, where my price targets are, and so forth. I've also got the Garson channel. I've got the Bitcoin death cross. I've got some more information here. I've got also the death cross countdown and some bearish divergences there as well. So yeah, follow this trade. Follow me on Tradingview. Smash up the like button. Comment, follow me as well. You'll also get the information to you, which is also going to be on Twitter and everything like that. Okay. So back to our head and shoulders and extended M pattern, guys. All right. Okay. So now we have to wait and see what plays out, guys. What plays out. Now, at the moment, price action, certain things are changing. We are floating around in this area. Bitcoin does not know what is going to happen. Now, if you have seen my death cross video, so please go watch it. It's there on my YouTube channel. And I will link up the link on the top screen here, and you will have a look, and you can have a look and see exactly. The death cross is probably going to happen tomorrow, guys, but look at the video, guys. It explains a hell of a lot what people aren't telling you on other YouTube channels or other Twitter. People aren't telling you what exactly is happening. Proper technical analysis with no BS. Straightforward facts, guys. Straightforward facts. Okay. The charts don't lie. People lie. So I'm just interpreting what I see here and trying to explain it to you guys so you can go out there and possibly enter into a trade or go into a spot account and say, right, price is going to plummet, or otherwise I'm going to sell here and I'm going to buy back here. Now, if you sell there, if the head and shoulders plays out, if you sell there and you buy back here, you've made yourself an extra 17% Bitcoin. Okay. Thank you very much. Thank you, Mr. Hybrid Trader. Thank you, Mr. Johnny. Great stuff. Fantastic. Okay. So this is why I do these videos for you guys, so you can trade like a professional. Just follow my YouTube channel, follow my trades, follow me on Tradingview, follow me on Twitter. Everything's going to be down at the bottom of this video. And guys, smash up the like button, share, comment. Let's grow this community. Let's grow this channel, because it's going to explode. With the charts and the information that I've got here, and oh man, I don't want to say anything more. It is going to be explosive. Okay, you don't want to miss the videos. Okay, guys. All right, so this is it. Thank you very much for everything. Guys, please be careful of scammers out there. Please, I will not DM you. I will not PM you and asking for seed phrases and please invest with me with a WhatsApp number. Not a chance. I don't do that. It's not what I do. It's what scammers do. And if you fall for it, guys, it is your own fault. So please, guys, make sure, keep a level head all the time and be ahead of the herd. Okay. Thank you, guys. Have a wonderful Friday. And I will be posting a couple more videos, hopefully today and over through the weekend, and updating the death cross and obviously updating the head and shoulders pattern. And we'll take it from there, guys. If you're on holiday, have fun. If you're in cold, have fun and be careful, guys. COVID out there is not a joke as well. Eh? So let's be safe and let's be wary and let's trade smart. Thanks, guys. Enjoy.